All right, I'll get going. It's right at 3 o'clock, and I turned the recorder back on so it could get recorded. Welcome, everybody. My name is Amy Knight with Knight CPA Group. If you've been around a long time, I used to be Amy Taylor, and have been in home care and hospice industry for a long time. I do know we have a lot of people attending that are not in that industry, and that is fine because this is very relevant to any small business. And so welcome, and now you know what I do. So there's been a lot going on, as you know, and I can't tell you how drastically my world has changed, not in the same sense, especially as our healthcare providers, but just what I was doing a week ago versus what I'm doing today. A week ago, I was planning marketing for additional, cost reports because our cost report deadline got extended, and then all of this funding package came out, and we just started getting so many questions. And so there's a small group of CPA firms that are like my buddies. So there's about 10 of us. And so we all kind of came together and said, look, we've got to tackle this, and let's divide and conquer and tackle it together. And so we've spent the last, really since Wednesday, I think we started on Tuesday, and I think everybody crashed on Wednesday because we all had bad days. And it was like that information overload, but like you couldn't rely on any of the information you're actually given because nothing was finalized. And so we all hit a wall on Wednesday. And then we regrouped on Thursday, and we have been in the weeds with this since Thursday. And I took on the role as becoming the group expert on what's called the Payroll Protection Program. And I did that because I think that's going to be the best benefit for my clients, and really affects a lot of small businesses, specifically employers. If you're hearing you don't have employers, I mean employees, still listen, but a lot of it is really geared towards employers. And they're going to be small business defined with 500 or less employees. We'll get into a little bit of the details of that in a moment. I am happy to stay on this webinar as long as you guys keep asking questions. I will try to answer everything I can. Several people did send me questions ahead of time, which makes it really helpful. So I've got that pulled up. I do have other resources on other screens. I have the actual act pulled up, and I've got some things highlighted. And what I'm talking about in this payroll protection program is only the first 50 so pages of 880. And that's about as far as I've gotten. So let's get going. CARES Act stands for Coronavirus Aid and I don't even remember what it stands for anymore, so we're just gonna skip that. Recovery and Economic Stimulus Act, something like that. So let's just jump right into it. I want to go over this payroll protection program. We'll just call it PPP, which includes the loan forgiveness. There's a whole lot of talk going around about a bunch of different loans, and SBA and 7A and 7B and all different kinds of stuff. I don't want to get too much into the minutia of technical terminology, but I'm talking about this PPP, and that's really where we're going to spend the bulk of our time. And then there's this other economic injury disaster loan, which comes with the option to get an advance, which they call a grant. That is not, you don't have to pay it back. And so it's a grant, and it's an advance of $10,000 up front. That's a different program, and I'll explain the difference and how you can strategize and use both of them if needed. We will briefly touch on unemployment. And I will mention this payroll tax deferral. There is also an employee retention payroll tax credit I won't even get into. But any of those, you can Google what's out there. There are tons of articles. Just don't take anything you read as absolute fact unless you're reading it from the SBA, the CDC, HHSC, some kind of governing body, the IRS. And if you have questions, reach out to a professional and let them clarify it for you, make sure you understand it correctly. So jumping in, I wanted to start with this biggest chunk first and the details of it. So the highlights are, the intention of this piece of the legislation is to keep America working. It is designed to give employers money to pay their employees specifically throughout this crisis. So even if they're shut down, restaurants, if part of our group of CPAs that I'm working with, 2 of them heavily are in niches of restaurants, and you can imagine how bad they're being hit. So the idea is, even if you have to shut down for shelter in place, you can still pay your employees and keep them employed, and this is there to help you cover that. Basically, they're saying, all right, we're going to give you 2.5 months of average payroll cost, and you've got to spend it over the next 8 weeks. If you spend it in 8 weeks in the over qualified expenses, we're going to forgive it for you, as long as you keep the same level of workforce and you keep the same level of salaries. So you can't say, I used to have $100,000 of payroll every month, and I'm going to get a loan at 2.5 times that, and then I'm going to cut my payroll in half by cutting my workforce and reducing salaries and spend it over that. If you do that, you can still do that, but your loan won't be forgiven at the full rate. It'll be prorated. So we'll get into some of those details. This is for employers and businesses with 500 or fewer employees, including self-employed and contractors, which starts, the more we think about it, the more kind of questions start surfacing. So I got some interesting thoughts on that. And you must have payroll expenses or net income, net earnings, to be considered payroll expenses. Okay, so we'll get into that. First off, to be eligible, it's any business or 501c3 that employs less than 500 employees, including full-time, part-time, and other. And I don't want to get ahead of myself, but this other, my question is, and I wrote down on my little printed handouts, is what about contractors? And so just kind of keep that thought there, because there's a calculation for payroll cost, which individual contractors are included, but it doesn't mention the individual contractors when considering full-time employees. But I think I'm getting too tied up in the minutia of it, because I don't think it really matters exactly how you calculate your average full-time employees before the event and after the event, when you get your loan and you rehire everybody, as long as you calculate it the exact same way. Because really what they're looking for is the change. And so if there is no change, then there's not much to worry about. And that kind of probably gets into too much minutia that we won't really go that deep into. Affiliation rules are waived. And so what this means is, like franchises with, so home care, there's a lot of home care franchises. They mean less than 500 employees at each location. Now, I know we have some very large home care operators that will have multiple branches, and each branch has less than 500 employees. I don't know if that qualifies. There's not enough definition on this yet to know exactly if you are a large company and it's all under one tax ID number. I have a sense they're going to go by tax ID number. So we'll have to look into those details as they come out. Again, everything here is very fluid. That's why I put on the front of this a date in which this presentation was put together and given, because it is changing daily. But there's another group that works closely with the SBA. They're doing daily updates, webinar updates. That's how fast it's moving. So anyways, but affiliations, and so I do know that, like in filing Texas franchise tax, or you may be bundled and call an affiliate, even if they're separate entities spread out. Those rules are waived for this purpose. Okay, they're treating each one as an individual unit here. The business must have been in business before 2/15 of this year. Okay, so it can't be any new business. That wouldn't make sense. And it does include sole proprietors, independent contractors, and eligible self-employed individuals. I did look up the definition for eligible self-employed individuals. It's explained under the Families First Act, the Families First Care Act. The the last big piece of legislation that came out before the CARES Act. And basically it covers everybody unless you do something very, very odd. Everybody's pretty much covered under this. So again, it's going to give you 250% or 2.5 times your average monthly payroll cost. So what goes into that calculation? Payroll cost is defined as wages, salaries, commissions, or similar compensation. So I'm thinking bonuses. So basically your compensation, tips, whether it's cash or cash equivalent, vacation, parental, family, or medical sick leave. That's normal, not the emergency stuff. We'll get to that on the next slide. Allowance for dismissal or separation. So if you paid somebody a severance package. And payments for health insurance premiums, payments for retirement benefits, and state and local taxes. And then the sum of payments to or income to a sole proprietor or 1099 contractor. So if you're a sole proprietor or a 1099 contractor, that's going to be wages, commissions, income, net earnings from your self-employment business up to $100,000 annually. And we'll get to that also. Payroll costs do not include employee comp over 100,000. Big question here. Yes, you get to include the first 100,000, and then you just exclude the second, any excess. So you only exclude the excess. Try to answer a little question there. Okay. Your primary residence must be inside the U.S., so it's excluded if your primary resident is outside the U.S. And taxes imposed or withheld under these rev codes, because I know everybody knows what those are. That is actually dependent care, elderly and disabled care, and child care. I had to look it up myself. What I want to go back and point out on this slide right here, payroll costs defined, there's a huge elephant not included here, and that's employer payroll tax. So the employer's portion of payroll tax is not included in this. I don't know why. It does strike me as odd. I just want to point it out. And I think it might be because there are some other programs that they're doing payroll tax deferrals on your payments, some credits and different things. That's the only reason I can think that that's not included in here. I'm just not sure, but it's not. So we're going to exclude these items. Most notably here is going to be this, any single employee over 100,000, we're going to have to exclude the excess only, okay? And so to calculate it, you're going to have to figure what your monthly payroll cost averages. If you were in business for the last year, all of last year, basically, you're going to take the 12 months prior to applying for the loan. It says loan origination date. That is what the act says, but I don't know how long it's going to take them from loan application to loan origination. And so, you know, technically, I don't know that that's capable. So what I'm putting forth is just, you know, go with up to the loan application date. So 12 months prior. Take your 12 months, total payroll, all those items, divide it by 12. So that's going to be your average payroll. If you're a seasonal employer, you can opt into one of two time frames listed right here. February 15th of last year to 6/30 of last year, or 3/1 of last year to 6/30 of last year. Again, why two different? Not sure, just passing on what they wrote in there. If you were not in business for the past 12 months, then you're going to use January 2020 through February 2020, okay? So you're going to take your average between those 2 months. Oh, I'm sorry. Once you figure your average monthly cost, you're just going to multiply it by 2.5 times, or 250%, okay? So I think this might be worded backwards. Again, I said I don't want to get too tied up in the technicalities, but I think the Payroll Protection Program is a type of SBA 7A loans. It is the only one that is eligible for forgiveness. So I think it's supposed to say Payroll Protection Program is the only business loan eligible for forgiveness under SBA 7A, because there's several SBA 7A loan types. Excuse me. You are going to have to apply through a third-party bank or a third-party lender. It's not going to be direct with the SBA. This other loan, that Emergent Economic Injury Disaster Loan, the EIDL, is actually a loan directly through the SBA. And I definitely want to get to that so you understand how to use both of these if you're going down that route. They are approving, so you know already there are a certain number of banks that are SBA approved already, lenders. They are approving more and more lenders as we go to try to accommodate everything. The max loan term is 10 years for what's not forgiven, and the maximum loan interest rate is 4%. So even if you can't spend everything they give you in that 8 weeks, it's still a 10-year note at 4% interest. And by the way, it comes deferred with a deferral of 6 to 12 months after it's dispersed. It's an excellent opportunity for a loan that maybe you might not be able to get on your own from banks, right? Payments will be deferred for the first 6 to 12 months after disbursement. The maximum loan here is $10 million. And only one PPP per entity per tax ID, okay? And if you have any questions, if you'll put them in the actual Q&A box, that way I can find them and it lets me answer them, and then it kind of archives it. So we can use that little feature. It should be there on your little side panel bar. And I only have one and it's answered. I'm gonna look at chat real quick and see if there's just anything I'm missing. So somebody asked, so do you subtract payroll taxes from monthly costs before calculation? Employer, yeah, just don't include them in your payroll calculation. So make sure you understand the difference between gross payroll and net payroll. This is going to be important. You might need to get help with this. So your gross payroll, that already includes all the employee side of the taxes, because those are gross wages. But you do not include the employer side, okay? So you might want to get with your payroll company or somebody to help with those things if you don't know how to calculate that. There's not going to be a down payment. We'll get to some more. I think everything else is just, hey, thanks for doing that, friends, you know, teasing me. So I think we're good on questions. Again, oh no, now the question panel's blowing up. Okay, we'll come back to some of those. Can it be any approved bank, or does it have to be your current bank? It can be any approved bank. Kind of the word going around is we think a lot of banks will probably lend to their existing client base first. So when I get to that point, I'm going to recommend that you probably visit with your existing bank first. I think that's going to be your best bet. They may not be an SBA lender, and they may not want to participate in this, but that's the first place I would go. And then personal credit, does your personal credit play into this to qualify? It does not. Here's the deal right here. No personal guarantees, no SBA lending fees, no collateral needed to guarantee the loans, and no need to show ability to obtain credit elsewhere, which is generally required with the SBA loan, as I understand it. So no, I don't want to make light of it, but they've worked really, really hard to make this easy for everybody to get as quickly as possible. And they've got to put some kind of stipulations in there, right? But they really have opened it wide up. And that's why I think it's so critical that everybody listen. You know, I put this out to my little local community here outside of Austin, because I know we've got restaurants and some small, you know, my doggy daycare, Chris is listening, and they're shut down, and this all applies to them as well. And again, like I said, even if you don't spend the money on these qualified expenses to have it forgiven, which I guess I should explain means then you don't have to pay it back, it's still an excellent way to borrow money that you may not have access to otherwise. So I think there's a little planning to be done there. So know your personal credit doesn't play into it. We do not yet have a list of banks or lenders, but I am working on it. I've got some emails out. I know my personal bank that my office mortgages with, American Bank here in Texas, and they've already started sending me information. I do have another connection out of our little group of CPAs that has a close tie with an SBA lender. That's all they do. And we're kind of working with him a little bit. I'm not sure how that's going to work out yet. For those of us with home office, can we use a loan to pay for mortgage utilities? I'm going to save that question, Jennifer, because that's a good one that I'm not sure of the answer. Stephanie, Amy Stevens, what dates are we using for the past 12 months? I personally kind of started my team off wrong this morning because I'm always quick on the trigger. If you're starting now, I think you should use April 1 of 19 through March 31st of 2020. I kind of backed my team up 1 month earlier than that. I did March of 19 through February of 20. But if you do the April of 19 to March of 20, for one thing, that's going to be clean quarter cutoffs. It's going to make it easier to get that information. Oh, I meant to close down Slack, and I thought I did, but that, oh, geez Louise. Sorry, y'all. Let me see, other questions. Is there a minimum company size or payroll average? No. Nope, it can, anybody, there's been no minimums. Can anyone be eligible for PPG? Yes, you can, Sonal. I think you're good to go. How soon can you apply at your bank? Well, that's the big question. I'm being told, this is Ed, I'm being told it's probably going to be a couple of weeks before banks are ready, at least 1 to 2 weeks. I know that the SBA group in Houston had a big meeting today with all of their SBA lenders, and I got some information back for that. They are scrambling to put together the applications. Now we haven't got there yet, but the EIDL loan, that application process is up and going. And it just started, I think it just went live today. It was live and crashed. So they've rebuilt it, and I think it's back up and going now. I'm going to try to exit this again. Sorry. Well, don't let me do it. Okay. So let me get back onto slide. It'll probably answer some more of these because there's a lot of questions now. Okay. Allowable use as a loan proceeds. So again, the idea here, my strategy is you use this and you use it for the intended purposes, so it's then forgiven. And then if you need additional working capital to get you through more than 2.5 months worth of payroll to pay other things that are not on this allowable list, like other payables, like vendors, like think about a restaurant, all your food supplies, all my home cares, all of your medical supplies and other expenses that you pay. Software, I mean, I know my software costs are outrageous. There are, that EIDL loan can be used for that, but it will have to be paid back. So let's talk about what's an allowable cost that will get this loan forgiven for you. So the proceeds have to be spent on payroll costs like we already defined. And so again, payroll taxes does not count, okay? But now keep in mind, you're getting 2.5 months worth of payroll given to you, but you only have 2 months to spend it. So you have 8 weeks following the date of the loan that you've got to spend this money for it to then be considered in the forgiveness plan. So in addition to payroll, they're letting you also, which is all of this, mortgage interest. Okay, now you can't go pay a big chunk on your mortgage payment of principal, but it can be mortgage interest. It can be interest on any other debts that you might have down here at the bottom. That were, they have to be in place before 2/15 is kind of the trigger date, but it also includes rent and rent under lease agreements. So I'm thinking equipment rent, and it also includes the utilities, which are electric, gas, transportation. I've got a question mark on this, telephone and internet. Paul at my office has been doing some transportation research. For my clients, I do not feel this includes mileage for home care, hospice industry. I don't feel like this includes mileage. I think this is transportation, maybe auto expenses. I think here in Texas, we're not used to transportation being considered a utility. So, stay tuned for more information on that. So these are the allowable uses of the proceed. Now, this, you can use it on anything. This is what's allowed for you to get it forgiven, okay? So that's what I want to focus on. So the forgiveness is up to 100%. They will not forgive more than the principal amount of the loan, okay? And that brings up a point. I'm not sure when interest will start calculating on the loan. So you may have to pay some interest on it, but I think maybe I read interest is deferred for 6 months. I'm not sure. Again, some of the details, there's just so much to it. We don't know everything yet. You must maintain the same level of employees as you had compared to prior periods. So I'm calling this workforce. You've got to keep your workforce at the same level. And that's going to be a calculation of FTEs. And again, so you're going to compare back to if you were in business last year, then you want to compare to this time frame last year. If you were not, then you want to compare to the first 2 months of this year. I have a question. I have one client in particular that's a hospice that is scaling because they are new and they were around all year last year, but they were still getting certified. And for me, I'm going to argue that they can use this time frame for their baseline of what their workforce was prior to the crisis. Because if I compare to last year, I guess that'd be fine too, because that now they'll be way over that level. But what's going to be critical is that however you calculate for the baseline, use the same calculation for the reestablishment. Same thing with salaries. You can't slash everybody's salaries. You've got the salary levels have to stay the same, and this is for everybody. I read if you even one person being reduced could prevent some forgiveness. So to me, it's just not worth it to do that. And kind of some planning with this. We haven't got to unemployment yet, but many of you have been reading about unemployment and what's going on with that right now. It's open to independent contractors. I don't know the details of it. I know it's open to independent contractors, and I know the federal government is tacking on an additional $600 a week to what the recipient would normally get. My advice would be, if you're in an industry, in a situation where you have no business right now, I would lay everybody off. Make them go file for unemployment. There are some states doing kind of this big package plan. Again, I did not study unemployment. And mostly because our home cares and hospices are fully staffed because they're frontline workers, essential, and they're busy. But I do have some clients that this does affect. And it did clearly say independent contractors are included, that they're going to use something like their 1099 or file tax return or P&L statement, income and expenses, to calculate their unemployment benefits. But I'm also being told, or I understand that some states, and Texas is one of them, is doing a plan where the employer can go into TWC, Texas Workforce Commission, and say, I am laying off my workforce. Here's who they are. Here's how much money they make. Then the individual employee goes and files for assistance. That's about as much detail as I know on that. But my thought again, my plan again would be for you, lay everybody off. Or if you're even in a home care business and you can lay off non-essential workers, think about this, lay them off, apply for this PPP. When you get those funds in for the PPP, then you can bring those people back on, or you can even kind of save some of your money up, because the requirement is that you have brought these levels for this forgiveness, this workforce level and salary levels have to be brought back up to pre-crisis levels by June 30th. Okay, so let's say you apply for this by April 1st, not going to happen, but let's say, and let's say it's in your hands and closed by April 30th. You still have 2 months. They're probably going to fund them pretty quick, I would guess. So let's say you get funded, hypothetically speaking, May 1st, maybe you don't need to bring back every unessential worker right away, but you bring them back before June 30th. My professional opinion is you want to do what you can to get this forgiveness, at least as much of it as possible. So that's really what they're wanting you to do, and that's why they put these dates in here. And restaurants are just a great example. So your doors are still shut. What Trump just announced until May 1st, he's trying to push more of these shelter-in-place things, right? So we're closed all of April. Well, if you were for some reason to get funded, maybe they do these really quick, and you get funded on April 15th. Well, maybe you hold off until much closer to when you can open back up before you bring those people on, okay? So that's just a little bit of planning there to consider. And I'm gonna kind of keep going through these slides and then come back to the questions, okay? Because there's quite a few over there. Let's see, I need some water, excuse me. We are preparing to help anybody that wants help with these loan applications. We're happy to help you get everything together. But we think there's going to be even more work required on the back end to apply for the forgiveness, because you're going to have to apply for it. And at that point, you're really going to have to verify. I see a typo. You're going to have to verify that you've spent that money how it was intended to be spent. And so payroll tax filings, general ledgers, I mean, it mentions canceled checks, source documents like audit kind of materials. We don't know yet what that's really going to look like once it's finalized, but we do think there's going to be a lot of work on the back end to make sure you can get that forgiveness. So if you get this loan, you want to make sure you're keeping super clean records as to how you spent it. Now, my question goes to, okay, I'm a home care agency. I'm still in operation. I'm still receiving, my regular revenue. Do I need to keep it separated? We're kind of toying with the idea of maybe you open a separate bank account to receive the loan into and disperse the money out of. And that would make it really easy to show the lender that you did that appropriately. I am not one personally for requesting clients or businesses to open a ton of bank accounts like some do under Profit First, which is a book and a philosophy of Dave Ramsey. It creates a lot of accounting work, but for this, it may be worth it. So we'll just have to see how that all kind of plays out. But again, you're going to want to really, really keep your records dialed in to make sure that you can get that forgiveness, because if you've done everything to earn it, let's make sure you can get it by your documentation. And I know my home cares, my hospices, my nursing homes, you guys are documentation queens and kings out there, because you got to document everything on the clinical side. So let's jump over to this other loan so it makes a little bit more sense. So there is this economic injury disaster loan and grants, and we're saying and grants because that's their advance on it, which is a $10,000 advance. These loans are available directly through the SBA. They are not eligible for forgiveness. They are for businesses and nonprofits over 500 or under, with fewer than 500 or less employees. They are up to $2 million in principal, interest deferment up to 4 years. And I believe this one is capped at a rate of 3.75% interest, and for nonprofit, 2.75 interest. I did have a question about churches. Churches, as defined by IRS, are automatically considered a 501c3, and in all of this legislation, it references nonprofits and 501c3s. So in my professional opinion, a church is qualified for all of this, for all of these benefits as well. It is available to pay expenses that could have been met had the disaster not occurred, including payroll and other expenses. You can get both of these loans. However, they cannot be used for the same purpose. And that's where like keeping separate bank accounts might come into play. So again, let's think that we're a restaurant now. You can, or a hotel. A hotel is a really good one too, because to me, it's going to take them longer to recover than the restaurants. And I don't mean any disrespect, because I'm saying restaurants, Los Pinos, when you open, I know you're doing takeout and delivery, but I'm ready to come in and get out of this house. So I think restaurants are going to be busy once this is over. But hotels, let's say you can qualify for $1 million loan under this to cover all of your other obligations, and you use the PPP loan to cover the payroll and those specific, the payroll, rent, utilities. It's only for 2 months. But this loan right here, it can be used for the entirety of, it's a 30-year note at these rates, right? And that might be on my next slide. It's not. So the point is that yes, you can have both, but you can't use them both for the same purpose. So your EIDL loan would be for all of your other expenses that don't qualify under PPP. I'm not sure how that's going to be administered. The whole CPA brain in me is like, how do you not commingle everything? I'm not real sure. Again, we'll be finding out more as the days pass. But so let's move on. So this EIDL grant is an emergency advance up to a $10,000 to small business and private nonprofits harmed by COVID-19. These funds are available within 3 days of applying. And I did have somebody, I don't know if it's a trusted source, they said they applied for this online directly at SBA. It was a simple application process, and there was a check mark. Do you want this 3-day advance on this grant? And he said yes, and then he filled in his bank info. That was just today. You have to apply for that loan, and then they'll advance you that money. The advance does not have to be repaid under any circumstance. However, if you get it and you get a PPP loan, it will offset the amount of forgiveness on the PPP loan. So you can't have your entire PPP loan forgiven plus this free $10,000, okay? So if you get that $10,000, just know $10,000 of your PPP loan will have to be repaid. Unemployment. Unemployment, again, I said I don't have a whole lot of details on this. Here's what I do know. It's any employee that was furloughed or part of a layoff due to the crisis. And every state varies. And an interesting question, if you're an employer in Texas, but you've got employees all over the country, how's that going to work? If you've got contractors, we don't know all those answers yet. And we're looking into them. But it's going to be dependent on the state. But there is an extra $600 tacked on each week through July 31st. And if if an employee was already unemployed due to COVID-19, the $600 weekly additional payment will be paid retroactively. Now, I've heard from some restaurants through my little networking group that they're trying to get some employees to come back, but the employees are making more money on unemployment than they would be. But that's not, that's, employees can say that all they want. When you offer their job back and they do not come back, then their employment benefits need to be terminated. So if their job is reestablished, those employment benefits should be terminated immediately. Again, technicalities of doing that, I'm not sure how that works. There is this payroll tax deferral. And the only reason that I want to mention it is, to me, you know, there's just a lot going around on social media. To me, this is a worst case scenario. I do not recommend this unless you absolutely have to do it. Payroll employer, it's, first of all, it's only the employer portion of your payroll tax deposit. And it's only the Social Security portion, which is the biggest chunk. So it's the 6.2% chunk of your payroll tax match. It can be deferred over the next 2 years. 50% of it is due December 31st of 2021. And then the other 50% is due December 31st of 2022. This is going to be for any taxes accrued from March 27th, the date the act was signed, through the end of this year. And I mean, if you're really savvy, I mean, you can do it. But I know the first sign of a failing business is failure to pay payroll taxes. And it is a vicious, vicious cycle once you get into it. And so my thought is, if you're paying all this payroll and you're not paying those taxes, that could be a very large bill that you get hit with. And nobody's going to bill you for it, by the way. The accounting side of it's a nightmare already. But, you know, now if you were to take it and put it in your own, you know, interest-bearing account and let it accrue, and you were that disciplined, more power to you. And I mean, you know, that works. But that is just a real slippery slope to get involved in. What we've heard from some of the payroll software vendors is, because it's like, well, how are you, you know, how are you going to deal with that if you're on ADP, right? Because they draft all of your payroll, including your taxes. We're told from what they're going to do is either draft it all and turn around and refund it to you, which doesn't make any sense. But maybe there's an election you can make to not have it drafted, but they are going to give that money back to you, and then you will be responsible for remitting those taxes. And again, it's going to be a nightmare for the payroll people. Is what I'm fearful of on that. So I wanted to mention it here so that you're aware of it, and also just so I can give my warning if I don't think it's a good approach. You know, I'd rather, I mean, if it's your last resort, then by all means, we're all about saving the business, but you've got to be able to calculate somewhere how much those taxes are, what that balance is creeping up to be, and what you're going to owe at that time. Here's what we know now. I only got a couple slides left to go, and then we'll get over to these questions. I've got about 36 of them. And because I think there's a lot of value in these questions that are coming in, other than me just reading from slides. So the SBA and the IRS are rapidly working on systems to get this in place. If you've ever worked with the IRS, you know, nothing's rapid with them. I don't know how they're going to deal with this. Luckily, it's not as much dependent on them as it is the SBA and the lenders. The good thing is the SBA seems to be moving very quickly, and the lenders, you know, my preference, I'm going to go to my small banks, because small banks can move a lot quicker. than your big Chase and Morgan and Bank of America and those things sometimes. And I love Chase. I personally bank with Chase. I have business bank with Chase. But I'm going to go to my local small lenders because I think they can move a lot quicker and mobilize and get stuff done in a quicker manner than some of the larger banks can. So anyways, everybody's adapting. Everybody's figuring out what they're going to do, how they're going to do it. And so then that's also being hampered because everybody's trying to work at home. Those of you that know me know I don't have children, but I have 4 dogs. Literally had to drag the bulldog out of here before I started this because she was snoring, and I kicked them all out, and I can hear them out there roughhousing. So, I mean, it's distracting sometimes working at home. And so I can imagine that making these changes are going to be slower than they were if we could all be in our offices. But I expect a period of chaos for a couple more weeks still before money starts actually hitting the banks, hitting the streets. And the banks are saying 1 to 2 weeks. What I'm wanting to do is, what can you do right now? Start getting your things together. Start getting your payroll records together. Do a quick calculation. What's it worth? Any clients of mine, let me know. We have a calculator. Any monthly clients, we are already putting this calculation together for you. I hope to have it out to you tomorrow so you know what that looks like. But my plan is, and one thing I haven't mentioned yet, is I want to be ready to go. When I've got a bank that says they're ready, I'm just going to start filing. One thing that I didn't mention is there is not enough money to go around. I mean, like really bad. $349 billion sounds like a whole lot. And it is in my world. I had to count them zeros when I typed it out. But compared to how many small businesses there are out there, there is not very much to go around. So I am trying not to get really excited about it, and my anxiety, which I don't usually have, is like through the roof, and I'm kind of pacing a little bit. I'm ready to get it going because I want to see what the process is like. I want to see how hard is it, how easy is it, and I want to get my people in and approved for this money, but there are a lot of me's out there doing the same thing. So I'm not going to use just, for our clients, if my client already has a banker relationship, that's who we're working with, is that relationship. But again, I'm working like the house is on fire because I kind of feel like it is. I want to get these things in because if they run out of money, I don't want it to be because we waited 4 or 5 weeks to apply for it. I did already, Wall Street Journal published this morning that they're already working on phase 4, which is designed or is looking like it's going to extend deadlines and extend funding, like add numbers to the bucket. So again, what can you be getting ready? I would definitely be getting your tax returns filed for 19. Anybody and everybody, personal, who cares that the deadlines were extended? Get them done. And then have your books up to date. We may not need formal financial statements to apply for. For some of it you will, but it sounds like most of it's really going to be geared on tax returns. But I would still have your bookkeeping current, up to date. I'm talking through March, not, 2019 has been caught up, because there are a lot of people out there that don't get their bookkeeping, their accounting, their financial records put together except for once a year. You need to get with somebody to do that on a regular, ongoing basis. If you like what I have to say, we are open to new clients for home care, hospice, nursing homes, assisted living, anything along that spectrum. If you don't fit in that niche, I have lots of resources and friends that I'd be happy to set you up with. We all work remotely. You don't have to be located where they are. I got a restaurant guy in Memphis. I've got a restaurant guy in Kentucky, which is Louisville. They both do a lot of restaurants. I've got a nonprofit lady out of, I want to say Pennsylvania. I don't think that's where it is. Anyways, I've got some different resources that I can definitely connect you with. I want to help as many people as we can. So we're here to help, all that, blah, blah, blah. I'm going to jump over to I'm going to go to the questions in the They're in both places. They're in the chat, but they're also in the little question panel. So let me go through some of these. If you have multiple businesses with separate tax IDs but similar ownership, can the loans be made for each tax ID? Yes, I'm going with yes on that, and I think that's been pretty clear. So yeah, you want to apply for a separate one for each tax ID. That was Jeremy. Christopher, we have seen an increase in number of employees during the last 12 months. If we use the average, it will not be representative of the real situation as of 2/15. Can we use the average of 2020 alone? So Christopher, I get that, and I'm with you. This sounds not intuitive. It's not the one thing you want to be able to prove is that you've employed at least as many or more employees as you did prior. So if your employee count is going up, you really shouldn't have anything to worry about, even if you, and so honestly, if it were me, I would use the prior 12 months, our average, and say, look, we're even higher level of workforce than we were back then. So, so you should be fine there. No, Amy, we are not going off a net payroll. We are going off a gross payroll. Okay, look for your gross payroll numbers. Robin. Okay, so here is, it sounds like it's a healthcare company with field staff, and they got two divisions. They've got their office admin, and they've got field staff. But their payroll averages are going down significantly because 50% of their patients are not being seen, and the field staff don't get it. So that is what this is for. So okay, this is Robin Collins. So speaking directly to you, this is where it gets a little dicey because you're in healthcare. Because I think when a restaurant opens back up and we're allowed to get out of our houses, I think everybody's going to go out and eat. I'm worried about in these healthcare providers that your patients are going to be scared to come back on services. The intent is that you bring the employee count up even if you are not servicing those patients. And that's what this money is there to cover. It's saying, okay, we know you don't have revenue to pay these people with because your business is in essence shut down or reduced by 50%. So we're going to pay it for you. We're going to fund you to keep these employees paid, because look at the bigger picture. We want these employees paid so they can pay their rent, their mortgage, their utilities, buy groceries, and we don't have a full economic collapse. So I hope that answers your question. You will qualify, but you're going to want to pay those employees, the field staff, anybody you can. I would wait until the absolute, you need to get with somebody to help you with strategizing this. So there's a difference between qualifying, reading the regs, filling out the applications, and really strategizing how you're going to use these benefits to make sure you get the best out of them. I would definitely say get with somebody to help strategize that for you. And I wish I could let you guys talk, but I'm not that savvy with this webinar thing just yet. So I don't have the income coming in. Am I still able to pay my employees and have it forgiven? Yes. Yes, that's what it's for. It's so that they're basically going to replace your revenue. So if you don't have any revenue coming in, they're going to be the revenue for you to turn around and pay your employees. This is exactly what it's designed for. That's Jennifer Abraham. Yeah, church payrolls are eligible, David. And I'm sorry, some of these I probably already answered. Weekday preschools connected to church. I'm going to say yes, David, on those, especially if it all falls under 501c3 is clearly defined. If the preschool is not part of the 501c3, it would still fall under, if it's a for-profit, it would still fall under a small business. So I think you're good on that. Okay, Monica Nava. You opened your coffee shop in July of 19. So you would use the first 2 months of 2020 for your calculations for your estimated payroll, okay? So if you go back, and I should have sent these out ahead of time. Let me see where those dates go. Well, here you go. Here's those dates again right there. I'll leave that there. We are, do we add in our cost for health insurance? Okay, great question, Becky Pendergrass. Do we add in our cost for health insurance or only the employee contributions? You add it all in, okay? So you include the full premium of the healthcare insurance. The way I've read it, there is you don't have to reduce it by how much is deducted from the employee. Because they want you keeping those alive. They want you keeping those health benefits active. Elsa Moore, do we need to justify why we need the loan? No, not from anything I've seen so far. You will sign a certification stating that you do need it because of the economic conditions, but it's just a certification. There's no proof or anything. Well, you know what? That does bring up a good question that I didn't include in these slides. That economic injury disaster loan, I believe to get that one, you do have to show that you have experienced like a 50% decrease in business from the same time last year. So on that loan program, there is a lot different qualification. And I do think you're going to have to justify that, hey, this is where we were last year, this is where we are this year. And because of, we're a restaurant because we got shut down, okay? So that was not in there. I do want to make that clear. Blessing, allowable to be spent on was the payroll cost, rent, mortgage interest, other loan interest for loans incurred prior to 2/15, and utilities. And I do want to say on the utilities, and because it covers internet, it cannot be, you cannot go out and get yourself a new AT&T plan with all the bells and whistles and cover that. It does have to be existing plans that were all in existence prior to 2/15 of 2020. If I work from home, does this include your rent and utilities? I'm going to want my tax professional to weigh in on this. Those that don't know me, I am the cost reporting professional in the firm. I know enough tax to be dangerous. That home office deduction gets real tricky. And so we're going to need to look into that one. And I'm actually going to make myself a note. Home office. My gut is going to say it will qualify. And I have everybody's email. We will send updates with more information as we get it. And so some of these I'll specifically email you guys and give you some good feedback. Can ambulance expense be considered transportation expense? Sonal, I'm going to say no. I think that needs to go. That would be covered under the EIDL. Loan, that economic injury disaster loan, if you qualify, which I don't think you're going to, unless you've had substantial decrease in business. I don't think that's what they mean by transportation. I think they're talking about some of the big cities like Chicago, New York, where you use a lot of mass transit and paying for like subway passes, parking passes, those kind of things. Again, I'll get some more clarification on that. Put that note down too. Another question that hasn't come up, but I asked it of myself, and Jennifer Montana, think about this one. Okay, so you have and this goes for our home care agencies, home care hospice. Let's do a little clarification on independent contractors. For my home care hospices, I feel, and we kind of debated this before the webinar, I feel that this is going to include your individuals, Susie Q that you issue a 1099 to. I don't feel like it's going to include Regency Therapy, Advanced Therapy Rehab. You know, those big rehab and therapy companies. If it's a company, I don't think it's going to include them. Do not include that with your payroll cost. Only include those that are just individuals that you pay 1099 contract labor to that are independent contractors. And then think about this. Okay, well, so I'm an employer that has independent contractors that work for me, and I'm going to get this loan and I'm going to keep paying them. But they're an independent contractor, and therefore they are self-employed, and therefore they are themselves eligible for this program. And so what is it that will prevent them or allow them for them to go apply for it and them get it and pay and cover their own cost, even though like it's double dipping? That's going to get real sticky. There is nothing about that. And I'm going to have to put my thinking cap on that, for that. And we're going to have to see what the banks do with that. It seems to me if you are being paid by a business that has received this loan in order to pay you, you should not be eligible to therefore apply for it yourself. I don't know. These are questions that are all coming out as we work through this. How do we keep track of expenses? We kind of touched on that. We might want to put them in separate account. I'm not sure. Is FTP comparison to the prior 12 months versus FTP at the loan date? So Brent McKenzie, it's going to be your average FTP for the prior 12 months. It's not even prior 12 months. It's actually this period right here. 2/15 of 19 to 6/30 of 19, unless you were not in business during that time. That's going to be the first 2 months of January. So it kind of follows these dates right here, first 2 months of 2020. So for you, it would be this range right here compared to whatever you get up to come June 30th. So it's not even a range at this last half. It's after you get the funding and you get reestablished and you get back up to capacity, or as much up to capacity as you can get by June 30th of 2020. So, so it's a little foggy still. I think there's enough there for us to work with, but it is kind of foggy. I have 2 people that who live outside the U.S. They are included in my FT count from last year. Will they not be covered? They will not be covered if they live outside the U.S. Do you have to bring back employees prior to loan approval? No. Very, very good question, Marissa. That's very key here in the strategy and the planning of this. You do not have to bring them back prior to getting the loan. You want to bring them back after you get the loan, okay? Is an owner and administrator, I have not been paying myself to hang on to funds. Is there a way I can include my salary that has been held? This came up. This is an owner that, to preserve capital, has not been paying themselves. My question would be, did you pay yourself in any of the last 12 months, even if it's a big lump sum like at year end, which we do with some of our business owners? If not, if the capital is there, I would pay yourself that amount of your annual amount. I would do it today or tomorrow. I would include it. You're going to have to pay the taxes on it, the payroll taxes. And then I would just loan the net amount of your check back to the company so that you can be included in that number. If you are not paid, we cannot include you. That's kind of the stance we've taken. trying to make sure I get as many of the questions as I can. Okay, answer live. Yes, if you're receiving funds for Medicare, which is your revenue source, yes, you can still apply for the loan. There's nothing that says you can't. Um, let's see. What are, yes, if we reduced work hours and we bring them back to full-time without work for the forgiveness, yes, you have until June 30th to bring them back to full-time. Is there a revenue new component for the PPP? No. Do you think we could use the EIDL for expansion? I think you could, but again, you may not have, I probably hadn't said it when you asked this question, Dave Parks. You do have to show economic injury. So you have to show that you've been hurt, but they're not gonna, they don't care how you spend that loan on the EIDL loan, okay? Can it be used to expand workforce due to COVID surge? I don't know why not. I mean, you would meet all the criteria. You're going to be using it to pay payroll. I think you're fine. That's Amy Potter. What is the minimum and maximum amount of loan from the EIDL? I do not have that fact in front of me, but you should be able to find it real easy online. I want to say the max is 2 million. $2 million. I don't know what the minimum is. Are 2019 tax returns required to submit the loans? I don't know yet. I encourage you to get them done. And Brent, I would even encourage you to get them done even, well, I hate to say this, but even if you're going to have to amend them later for a K-1, especially if you're talking about personal loan, personal tax returns. I don't think you're going to need it for the PPP, but I know on the personal side, a lot of times we have to wait for K-1s from other entities. And if you need it, then I would file and then just amend it if you have to. I don't think they're going to be needed though. Is it correct that if we were in business, no, Peter Siegel, there's a lot of confusion, and I've seen several people put out this date range of how to calculate your average payroll to determine your PPP loan amount. If you were in business last year, it needs to be the prior 12 months, not 2/15/19 to 6/30/19. That is only for seasonal employees, employers. Ronnie Madison, how you doing? CPA on a webinar last year said to be eligible for the EIDL loan. It sounds like what they're talking about. You had to be in certain business sector. That one I have not heard other than small business, okay? Because there are completely separate initiatives going for the big businesses. And we had kind of a little funny about that. But you do have to, I believe the number is 50%. If it was a last week webinar, who knows what changed, but I do think it is 50% reduction in revenue. So that's really going to be prime for your restaurants. I mean, lots of retail, right? And in that time period, I'm with you. I think it's going to be from 2/15 to 6/30 or somewhere thereabouts. And pre-qualification conditions, well, that's what we just talked about. So I think there are some conditions on this particular loan. Stephanie writes, if you have a current SBA loan, are you still able to apply? Yes, you are. And I don't want to get detailed because I don't know the details. There is something about being able to then roll your existing SBA loan into the PPP loan, if needed. I need to look into that further. I'm not sure, but yes, you can. And as your qualified expenses for the forgiveness, your interest on that SBA loan is included. And as a side note, I was just reading before we got on here that the SBA will automatically be deferring all loans under the 7A program, which is probably where yours is, for like 6 months. Like, you don't have to request it or anything, so kind of watch for that. Do I hire back all 12 or just key employees that will benefit for the demand right now or for the future is 3 months out? So Chris, what you want to do is first of all, you want to wait and see if you get this loan. If you get this loan by June 30th, and I mean, it just says by June 30th. It doesn't say the 2 weeks prior, but by June 30th, you need to show that you've employed them all back at the same rates. But the whole hope and idea is that you're back up to full steam. And Chris, by the way, is my doggy daycare lady, and I'm sad that she's shut down right now, and neighbor. So yeah, you'll want to hire everybody back, but you want to wait, and you can even wait, like say you get the loan now, you can wait until then to hire them back, but you only have 8 weeks to spend that money. So I can help you through some of that. Non-medical home care can have so many ups and downs. Yes. So are you saying if we are not 50%? The 50% reduction in revenue does not apply to the PPP loan. So Don Bransky, you don't have to worry about that for this loan. How much are we charging to submit applications? I don't have that all defined yet, but I will reach out with some more information on that. I think it's going to be, it'll definitely be fixed package level. That's how I like to charge for things. But I will get back to you guys on that. Okay, and this great question came up, and I'm sorry, I'm not even looking at my other pre questions. I think I've answered most. CDS, anybody in our home care world, and you may not even know about this, my professional opinion, and again, just kind of taking lots of pieces of this, I do not think CDS or FMSA payroll is going to count. You act as a payroll processing company for those employers. So I'm going to say no, that those payroll dollars do not count. So I'm hoping you're running separate payrolls for that. I do know the CDS program, as I've worked very close with a client that runs one of those. So I don't think you're going to be able to deduct that. As a business owner, can I lay myself off to collect unemployment? I think you can. I think he may have just logged off though, because he went away. Am I going to do this webinar again? It kind of depends on the demand for it, but it is being recorded, Elsa, and I will give you guys a link to my YouTube channel once I get it up there. It'll be up there before the end of the day. And you can just look up Night CPA Group on YouTube. We got a little channel there. So I'll definitely have this recorded there so you can watch it, you can fast forward and get to what you want. How can we account for the significant increased expenses spent on PPE? Dawn, the PPP loan cannot go towards your personal protection equipment, and I apologize for that. But if that EIDL loan is a possibility, that can. But here's my thought, okay? And I'm going to apologize right now. My windows are open and there's a diesel pickup truck about to back down the driveway, so it'll be noisy for a moment. My thought on that is use this loan to pay payroll and what it is allowed for, and use your regular revenue to help cover those additional expenses that I know all of you frontline healthcare workers are dealing with. Oh, he's not even going to just back down the driveway. He's going to pull out again and back down again. Sorry, everybody. Let's see. Will work expense cell phones. Cell phones, yes, cell phones do. A telephone qualifies under your PPP loan. I like this question. If you laid off an employee in the month of March, do you have to bring back that same employee, or can you replace the position with a different employee? I need to ask that question. I'm not sure. I don't know that. I don't see any way that they can know whether it's the exact employee or not. So I'm going to go with no, but I'm going to write that little note too. Especially if it's somebody you had already laid off that was for not reasons of COVID-19, like you laid them off because they were a bad employee. I'm going to say you do not have to hire back the same employee, at least not here in Texas. Lucille, that was for you. Can the company continue to maintain? Yes. Amy Voss, can the company continue to maintain employee health insurance if we have staff file for unemployment until we get the PPP loan? Yes, they want you to keep paying that health insurance premium, okay? If you reduce salaried, high paid individuals, can you restore their salary with the loan? For it to be forgivable, you can restore it, but only up to $100,000. Anything over $100,000 will not be considered as part of your allowable expenses, but you will have to bring them back up to where they were at about $100,000. So again, Victor, Camilo, the payroll cost does not include all employer taxes. It only includes SUTA, okay? I'm gonna go ahead and log off. That's all the questions that I've got so far. Hold on, I'm just gonna close my windows. I'm sorry, you guys. Oh, this will be a great camera shot. Okay, sorry. Wasn't planning on the lawn crew. Apparently they're not sheltering in place and it's raining. There are some more questions coming in and I'm happy to sit here as long as needed. Anybody, if you want to drop off, if you're not offending me. So the loan can be forgiven for all payroll expenses or just what revenue wouldn't cover. All payroll expenses. Marissa, this is going to be really interesting to me because that's kind of the thing, like how do you separate it? How do you account for it? I'm not sure, and I don't think that they care. They want to see that you paid payroll. So let's say you're a home care business, you don't have your revenues haven't dropped, then you just keep paying. You can use this loan to pay your payroll and your regular revenue to pay everything else. And I don't know that they're really going to be able to separate those dollars. And I don't know that they really want to. What they're really after is that you've kept your staff on payroll and you've paid them. Because really it's just as much about the employee and the individuals out there and the workers as it is about the small business. And really what this PPP loan, it's really more about the workers than the employer. And I mean, it's there to help, so the employer can help, keep the employee on payroll, but it's really so the employee can have money to pay their bills. If I loan personal money to the business to stay afloat and to make payroll in the meantime, I can still pay myself back from the loan money so long as payroll is incurred, right? Yes, I believe I understand your question, and yes, at this point, get really loud in here, but do whatever you can to stay afloat. Brent McKenzie. Brent McKenzie, yes, 2.5 months of worth of payroll, but you get to pay all of your utilities, your mortgage, your rent, and the idea is that that will cover that additional half month of payroll they are giving you. I think I'm gonna have to sign out since it's getting so loud in here. I'm sure it sounds horrible to you guys. All right, I hope this was informational. I know it's a lot of info and it's a lot to digest. We are here, we are happy to help. Again, I'm gonna follow up. with some more information. I'm going to follow up with putting together a package on how we can help. And then I will be working on a list of resources for banking that we can use. I apologize for the lawn care disruptions there at the end. And I'm around. My email is at the very back of this slide. And it was also in the link that you got the registration link. It was in there, and you can find me on social media, but also on the website is really good information. We're working on our COVID resources web page right now, and that'll be out soon. So thank you guys. I had a great attendance, and I look forward to helping as many of you as I can. And if you're a TAC member, we're doing another presentation on Thursday, 2 hours with me and Hans, which is one of the lobbyists for the Home Care Hospice Association. So if you're a member, it's a members only benefit. Make sure you check that out as well. All right, thanks guys.